Hello, hello, hello. Welcome to Stock Trades. In this video, we're going to go ahead and talk about today's Wells Fargo healthcare conference, which is set to schedule from September 7th to September 9th. Clover happened to present on the first day. So I wanted to go in and pretty much basically talk about these things that are that happened today, and then kind of comment on some important aspects. So the guy's name is Steve Baxter. I think, Steven Baxter. Let me double check here. He's an analyst at Wells Fargo. Why did I get this notification so late? I'm not too sure. This is a live video. This is a live. Okay. So how you doing, Kim? So I just wanted to take some time to listen to the recording here for Wells Fargo and comment down my thoughts and hear the community's thoughts. And hopefully maybe they were able to talk about free cash flow positivity. Again, right now, from the investor perspective, we gotta, I hate to, again, it's getting to a point where we want to keep asking about the free cash flow positivity. Okay. I just got the notification. Perfect. Yes. So let me go ahead and share the screen. So the first thing I want to do is definitely help us share this video over to what's that place called? StockTwits. Again, to get the word out. This individual here, again, his ratings are not as good. Again, he's ranked last. I mean, if he's watching this video, I'm sorry. This is what we have on you. I did reach out to him, and I told him, would love to have you on to kind of see exactly kind of where you stand after post meeting. Now, very quickly, you talked about what we missed today. Just want to basically show you here. Today, we received a lot of signals indicating that institutions are spending a record amount on the hedge, meaning that they're hedging that the market's going to go down even more. Again, this is really abnormal. I've honestly never seen something like this before. I think this is definitely very bearish. We also see it here in terms of more bearish strategies that's happened, and usually these pan out really well. Same thing here. Now, granted, if I may add to this, this is what we talked about earlier today. If I may add to this, this is bad for the short term, but good for the long term. But how much of it is bad for Clover? That's a insurance company that is good for recessions. Again, you got to have to take this. This is the global market scheme. This is every stock. So if you have other stocks, which I hope you do, you shouldn't put all your eggs in one basket. Definitely, you should take a look at that and kind of think to yourself. For our mastering students, go to the sector rotations and see what sectors are doing well right now and what sectors are not doing well. Right. Again, it's the beauty of the stock market and having all this data. You're really able to play around and do some research. Now, it's funny because Dr. Michael Burry, who knows about our platform, very honored to have that. He recently posted a couple of posts. Now, every time he posts, because he deletes his posts. In fact, if you go to his Twitter right now, I'm sure he probably... Oh, he still has this one. Wow, he hasn't been deleting. Interesting. Well, then go Dr. Burry. He hasn't been deleting a lot of his posts, which is pretty impressive. He usually deletes it. But one thing that stuck out to me was he pretty much said, crypto crash, check. Meme crash, check. SPAC crash, check. Inflation, check. 2000 and 2008, check. And 2022, check. So he's betting that there could be a recession. From the data that we saw today, it's others are prepping for that too. So we can do a Wells Fargo intrinsic value calculation, but this is a healthcare conference. that Clover Health went to Wells Fargo. So what we can do is we're going to go ahead and listen to it. And we're going to see what we come up with. So let's go ahead and share the screen here. Go to Chrome tab. There. Just quick here, just so we can talk about this. So they are buying a lot of puts on the option. Yeah. So the data that we have is fresh. Retail investors will get it a couple days out. Yeah. So they and it could be manipulation. I don't know. But we know that it's there, and we're gonna have to see other criterions to look at. That's why I like investing like a fundamental perspective from the fundamentals, because it really helps, because you kind of parcelate through all this BS, because we know in the long term companies that are fundamentally sounding and they're headed in the right direction will do well. So he has been deleting because he's learned we can still record his tweets. Exactly. Yeah, that's kind of, everything's recorded. That's funny. You see Elk Merger and DNA Social Capital. Yes, I believe one of them ran up to like $40 or something. We talked about it 2 days ago. Maybe might be this ticker you're talking about. I have to take a look. Let me go. I should have gotten some water here. Let's go ahead and let's play this, and we'll have some fun together, and we'll go from there.
Hey, hi, everybody. I'm Steve Baxter, the Healthcare Services Analyst here at Wells Fargo.
Now, let me see. Let me do a test. Did you guys hear that? Increase the volume a little bit more. Comment down below if you hear that. Okay. All right. Let me go ahead and play it just in case here. All right.
Hey, hi, everybody. I'm Steve Baxter, the Healthcare Services Analyst here at Wells Fargo. Very pleased this morning to be joined by Clover Health, which is an innovative company in the Medicare Advantage space. It has also branched out to serve beneficiaries in Original Medicare. We're joined today on stage by Vivek Arapali, who's co-founder and CEO of the company, and Ryan Schmidt from Investor Relations in the audience. So with that, let's get started. I think to start, I think people in this presentation are probably generally familiar with Medicare Advantage, but potentially less familiar with your company's approach to the market. Could you spend a minute just taking us through what makes you different and what's enabled some of your early success to date?
Sure. Thanks for having me. When we think about kind of success for Clover, it's not our be-all, end-all isn't to build the biggest Medicare Advantage plan. We really set.
So I'm just going to stop it right here. I went to go get some water, and that was a nice introduction. He said it pretty clearly. He said the people in this conference are very familiar with Clover, right? They're very familiar with Medicaid and the healthcare system, and how messed up it is, right? But they're very familiar. But they're not so familiar. They are not familiar with Clover. Okay, they are not familiar with Clover. So this is going to be very helpful, because there are other investors in Clover. There are other, there are people that are there that are not investors. There are more institutions there. Wells Fargo's there. Private equity firms are there. Other analysts are there. And the more that Clover reaches out to these banks, the more the brand becomes stronger. Okay. So there's a kind of this, and I'm going to go ahead and just rewind it a little bit here, just so we can listen to Mr. Vivek here. But I just wanted to put that in perspective. Okay. All right. Let's get it.
Advantage, but potentially less familiar with your company's approach to the market. Could you spend a minute just taking us through what makes you different and what's enabled some of your early success to date?
Sure. Thanks for having me. When we think about kind of success for Clover, it's not our be-all, end-all isn't to build the biggest Medicare Advantage plan. We really set out when we started the company to solve a very specific problem. So this is the fifth healthcare business that I built, and this is the second one in the technology space within healthcare. And one of the problems that I've seen firsthand, just having kind of in the first phase of my healthcare career being on the services side, is this sort of dichotomy of where innovation has happened. And so if we think about some of the positives over the last 30 plus years or even more, you've had incredible innovation in a number of therapeutics that have come out into the market. You've had incredible innovation in terms of medical devices, ability to do very complex procedures. And you've had, in a really good way, mounds of peer-reviewed clinical evidence that now exists on how to navigate through all that. But then when we look at what do physicians have in front of them to make decisions, nothing's really changed. It's what's in front of them is an EHR system that was born out of government regulation. So the companies that got created out of that were purpose-built to monetize meaningful use dollars. So the central nervous system of them is how to be compliant with EHR requirements. And then the other component is how to make sure you're maximizing revenue. And it's turned into, for physicians, how to make sure you don't get dollars taken back from you. So that's the technology for physicians. And then you think about where is that extremely damaging. So you look at the elderly population. I think this is in almost any country that has developed to the extent we have. You've got baby boomers are still coming in the order of 10,000 a day. But on top of that, the fastest growing population in the United States year over year, percentage-wise, is 90 and over. And so you just think about just this massive increase in the number of individuals that are 60, 65, 70 and over. But then if you think about chronic disease, you've got 80% of individuals over 65 with at least one chronic condition, 68%, two or more.
Yeah, I just wanted to go ahead and just kind of touch base here. I'm in the healthcare field, and I can't tell you specific patient encounters and give you identifying patient, HIPAA. But what I can tell you is I've seen patterns. And God forbid, I hope no one on this call gets diabetes and hypertension and chronic kidney disease. But a lot of folks that I've seen and read through the charts and learning the art of science and disease and in medicine, guys, I mean, it's not like you only get one chronic condition. There are people coming in with diabetes, hypertension, and chronic kidney disease. People coming in with heart failure, reduced ejection fraction, and all these things here, okay? And it's not like it's one chronic disease. There's and on top of this, we have every single day 10,000 Americans turning 65 years of age. And if you think that's bad, everyone ages, right? So then you have the rest of the population around the world going through this problem, right? And every time the worlds advance and they become more McDonaldized, you're going to get McDonaldized outcomes. Like, for example, look at Europe. I'm sure their life expectancies is going to start getting hurt. And they're going to probably start having diets worse than us, as bad as the American diet, which is terrible, right? So actually, in Jeffrey, I saw your comment on the Discord. So just as a very kind of tangent line here for all our Al Stock alerts and mastering, we'll be creating a channel on Discord on our communities tab, where we can talk about workouts, diet plans that worked for. Now you're like, what stock market? Like what in the world? What stock market Discord has a weight loss section? You know what I mean? But you have to understand, guys, it's all connected. Mind, body, and spirit, okay? Yes, we can work the mind out. We can learn intrinsic value calculation. But if you don't have your health, if your body's not working, right? Either you give it time and respect it, which I haven't been doing. I trashed it, like I'm terrible. If we don't respect our bodies, then we're going to be forced to have to make time in the future. Forced is the key word. So we're going to be integrating some workout. We're going to show you guys what I'm using. We can talk about what you guys are using, and just, I don't know, might show some pictures of some fat bodies or something, and hopefully, those pictures. I don't know if you guys are comfortable with that. Like, what kind of group is this? But again, I want this group to be life-changing. If we're going to make life-changing money, we're going to have to make life-changing lifestyles, right? You can't, you can if you want. You can be rich and eat like a fat ass and then be unhealthy. But that's kind of something that I want to talk about. Not only are you in our group, not only you're going to be investing in your financials and in your financial literacy, you're also going to. I want this to also be an investment in your health. Because time is money. If you can live an extra 10 to 15, 20 years, imagine the recessions that you're going to see, extra recessions you're going to see. And hopefully you don't have dementia, right? And a way to basically fight that is reading and exercising and all these things. Anywho, big tangent. Just wanted to basically inject that in there because we are talking about healthcare. Okay. So just wanted to put that in there. Okay. And we're also trying to build a community here, right? We're trying to build a very like a freaking beautiful Amish big community. on Amish that people that use technology. Okay, so it's the best example I can think of. All right, let's get back to it.
And then what do physicians have to make better decisions? And then on top of that, and I know I'm being a bit cynical here, but on top of that, the primary business model of all MA plans in the country except Clover is to let's narrow the primary care doctors you can see. So on top of that, we're going to say, let's lop off that half, or lop off that 40%. Yeah. But if you look at the number of primary care physicians that are going to come onto the market in the next 10 years versus the population, it's an even bigger problem. So our view was, let's build great software to help physicians make great decisions at scale, because we think solving that problem is a really important problem. But then the second thing became, how do we actually build that into a business that could actually create business value? Because if we actually and we tried this, we tried to build that software and sell it to someone, no one wants it. And those who do want it, physicians can't afford to pay for it. So our view was, we can build great software and be able to scale it, but also be able to rapidly improve it and have a closed loop feedback system to determine the impact of our features if we built it inside of our own Medicare Advantage plan. So that's what we built an MA plan. I definitely didn't dream of wanting to start an MA plan. It was the last thing I wanted to do, but it was really a means to an end to create great software.
Yeah, this is very, 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 very important. I mean, I'm very happy he said that. They don't want to do an insurance plan. He said, I don't want to do it, right? The only reason why he's doing this is the ability for him to scale his software. Now, my question is, okay, you want to scale your software. When will you monetize this software? Now, again, we're always shareholders. We're always asking about when is the next monetization. If you go back in time, and during the time of Facebook's creation, before Peter Thiel came online and took it to the next level, there was another Facebook company that did the same thing. I forgot what it was called because it became meaningless. Facebook was free. This other program, he monetized it too early. He said that it's a privilege to be in this Ivy League program. It's a privilege to be in these areas, so we're going to charge for it. We have Mark Zuckerberg, who did not think about monetization, just like how he does in WhatsApp and everything. All those are free. And you have another guy monetizing too early. And it gets to a point where one is obviously Mark Zuckerberg is successful. The other guy, I don't even know his name. And that makes that should tell you where he's at now. I have no idea. Right? So that's something that is interesting to me. But I want to know a plan though. I want to know, when are they going to monetize? Hopefully it's in the meeting. When are they going to monetize? Are they going to monetize? And if the MA wasn't the idea, then I get it. You're using the software to scale, but the problem is doctors are not going to pay for it. And, personally for me is, if Clover becomes my crutch and I get to a point where I'm making more money because of Clover, and then all of a sudden they start charging me, then as a physician, I have to do a cost. If I was the physician of that clinic or whatever, I would do a cost ratio analysis. I would say, well, if I pay for Clover in the future, well, is my practice going to be, am I going to make more money if I just say, I'm sorry, Clover, I can't use your software. It's too expensive for me. I'm just going to do it the normal way. And how much would be that cut? And that gain, the risk and benefit to that physician's top to bottom line. So that's something interesting to see. I don't know. I think they're using this to scale the software, but at the same time, as he was saying, he's getting this feedback, which is the whole point of machine learning. Every time these physicians tinker with this software, it gets smarter and smarter and smarter. And it could see connections in the future better than physicians can. And I think maybe that's where this is going. Because let's face it, diabetes, heart disease, that's not going anywhere. Hypertension. And if we can know the intricacies and see how everything's related. Like, for example, today I gave a talk about anemia of chronic disease. I could just let me just, I know this is a little too much for you guys, but I think it is helpful to kind of, to give you this understanding, because you guys are just investing in a company. You guys don't know kind of like the comorbidities and all these connections that you can have in healthcare. So let me just go ahead and let me just give you this quick little rundown. Okay, you have a 53-year-old woman that comes to a physician. This is an easy case with a 5-month history of insomnia. Okay, she's trying to fall asleep, but she has leg discomfort. And so I made this presentation today, and I presented on it in an ambulatory medicine. Okay, so she has leg discomfort, and it's temporarily relieved by movement. So moving it basically helps. Okay, her husband says, her ankles are upward while she sleeps. She appears fatigued and anxious, and laboratory studies show low levels of ferritin. Okay, what is the possible diagnosis? Well, for all the doctors in this call, the answer is restless leg syndrome. Okay, so let's go a little bit deeper. Obviously, this is a neurological disease. Here, it affects 15% of the population. Women are affected more than males. Peak incidence is 30 to 40 years. It's often misdiagnosed as growing pains in childhood. Again, this is not right. So that's kind of how it looks like. Again, clinical diagnosis. We don't really care about this right now. I'm not really going to be talking about this. I want to talk about secondary symptoms, secondary RLS. This is less common. It has to deal with iron deficiency, ADHD, uremia, chronic kidney, which is part of the chronic kidney disease spectrum, Parkinson's disease, right? So what? Parkinson's disease, the brain, iron deficiency. What in the world? Your legs related to your iron? And this is what I was talking about. Clover Health can help with these connections, and it can create this system where it keeps updating itself to where a physician, it becomes very, it starts to become intuitive, almost like a physician inside this freaking Clover, this AI. It's like a doctor. It's like a doctor in there, right? Okay. And what's going to end up happening is it'll tell you, test the ferritin levels. Test this, test that. Primary, you would want to treat with alpha-2 delta calcium channel, which is gabapentin for people that probably know. Okay. Then you have, first line treatments, which is gabapentin, pregabalin, or second line, which is dopamine agonist. And this is how complicated this gets. You're talking iron now. What's the connection between iron and dopamine? And this is the connection, right? If you don't have iron, you decrease your tyrosine hydroxylase activity, which decreases your dopa synthesis, which gives you these neuro problems, right? And you can see how this is all connected. And this is getting complicated. But again, I want to just show you the connection of how all this is related. Liver with interleukin 6, which causes the ferritin to go inside of a cell, which means you're not absorbing iron. The story gets complicated. And when you have the Clover assistant coming in, and basically, and I'm giving you guys my experience here to kind of get you, you can see what I see. It's going to help the whole healthcare process. You're going to have an up-to-date inside of the system, an amboss inside of the system, a very intrinsic system. And in the beginning, it's of course not going to get adopted. Back in the day, I was rotating with a doctor, Dr. Krishnetta, and he was talking about how up-to-date, no one believed in it. Everyone's like, oh, don't listen to that. You're going to be a stupid doctor. But now it's like part of practice. You go to up-to-date. It's like evidence-based medicine. Anywho, this is kind of giving you guys kind of a little bit of my experience. And I hope that was helpful. Let's go back to the video. Again, I don't want to make the video long, but again, I just, you guys can look at the secondary, tertiary associations and how difficult it is for a physician to remember these things as we advance in science. The body's complex. So why don't we have software to make it easier? Right? And that's what they're trying to do. So let's continue.
Yeah, so obviously you're talking about Clover Assistant. So, we'd love to just hear a little bit more about how much the product has changed or iterated. Talk a little bit about the financial implications for that, if you have providers that are using it versus not, and I guess just the implications for the growth of the health plan side of things would be helpful.
Yeah, absolutely. So within Medicare Advantage, we have about half of our members see a physician on Clover Assistant, and there's a few underpinnings of it. So as I said before, we're not here to replace the EHR. EHRs are very purpose-built to execute on certain things, when you think about building software for anyone, including physicians, especially when they're going to leverage it to help make better clinical decisions, there's a few underpinnings that we think not only differentiate, that are going to make it psychologically difficult for incumbents or any organizations to modify their approach. One, physicians have to trust the data that you're presenting to them. Two, they really need to know that how they engage back with it is not going to harm them on the payment side. And on the flip side, isn't going to benefit them in an incremental way. Meaning, if there's a way for them to have clawbacks because of how they're engaging with it, or game it to where they can get paid incrementally more based on how they engage with it, you've now kind of poisoned that interaction, because it's great software for complex decisions isn't just do this or do that. There's a conversation that's happening at the point of care. If that conversation is not actually honest on both sides, it's going to add no value. The software has no value. So one of the early underpinnings was creating a flat payment model where physicians got paid the same amount, still get paid the same amount per visit, irrespective of whether the patient is high acuity or low acuity. And so all of a sudden we removed that very ever-present concept of payment paranoia. So physicians can now, so when we're even having that first conversation with a physician, it's very natural for a physician to conclude we're going to use this against them. And there's some other way for them to get paid, or we need certain data, and so we're going to pay them for that. And really all we're asking, literally, is just honestly engage with it. But even the payment model expresses that as well. And it's a very powerful concept. It treats physicians like actual humans that we trust, who went to school and medical school, et cetera, for so long. Not too different to how we treat attorneys, as an example. They get paid by the hour, and no one's up in arms every day about it. But taking it a step further, the other thing that was very important to us was not, in the early days, not integrating with EHRs. And so what makes great software is you need to rapidly improve it based on feedback that comes in. If all of a sudden you're doing these deep two-way integrations with various EHR systems, you're now subject to their IT upgrade cycles, and you're now building all these bespoke features to fit within different EHRs. So all of a sudden your eng team is just massive. You're never going to get anyone talented to come work with you on the technology side, and it ends up becoming a disaster. And I have no doubt every payer has tried to build something, like we built, but always gets stopped with these very basic, but I think first principles concepts. And the third part is you need that closed loop model to determine what is working, what's not, what's the engagement. And you need physicians in this case to actually honestly engage back with you and tell you what needs to be improved. So that the real power, I wouldn't say any of our features are groundbreaking. We're not curing cancer or curing diabetes in the life sciences sense. But when you're able to leverage various data that us and other payers have as well, but surface it.
So I just want to just side deviation. I do see a comment here. What does this have to do with 8 MOAS? So I've got a lot of comments that say, hey, what are you talking about Clover for? It's one play and one play only. Again, we have a lot of people from various different types of fields that listen to us. We have lawyers that come on here. We have doctors that have purchased our software and package. We're an actual business, Al Stock Trades LLC. And we have physicians that are making close to $300,000, $400,000 to $800,000 a year. And, saying, oh, one play and that's it, put all your money in AMC and APE, that becomes very dangerous when you have a family, when you have children you have to feed. Again, majority of you guys probably who are saying this or probably don't have any kids. From a very risk management perspective, do you want to put all your money in one basket? This will not be the channel for you. We practice Warren Buffett investing. We do 10% of our portfolio as speculative plays. The rest is engaged in plays that are intrinsically sounding and in companies that are free cash flow positive or about to become free cash flow positive and net income positive. So we do have AMC videos, but the title of this video does not have AMC in there. It has Clover. So there's no APE in there. So the video is subsequently not involving APE or AMC, but we will be talking about that. But I heard a comment earlier when someone was saying, you just invest in AMC. That's all you need. No, right? Again, I'm going to be a physician. I'm going to be running my own portfolio for my family. I'm not putting all my eggs in one basket. If that's your investment strategy, then, maybe APE will work out, AMC will work out, they will cover. But then if you keep doing that over and over again, you will lose your money and you will fail. That is, you will fail, right? If you keep doing this, so that's something that you would need to take into account. But am I bullish for AMC? Of course, Regal, whatever, Cineworld, Cinnabon, whatever it's, we will love to call it. They are bankrupt and they just filed for Chapter 11. AMC is not, because retail saved them, right? But I want to be very clear, okay? You don't put your eggs in one basket, okay? So I stopped the video. I didn't want to talk about this in Clover, but I wanted to explain. Of course, yeah. And again, we like to teach real investing here. Okay, for all those videos out there, YouTube land, they again, a lot of these folks are not going to, A lot of these folks get their money probably from YouTube. They get their money from X, Y, and Z. Now you may look at her software and say, "Oh, this guy's living off of his software." No, I'm not. That's not. I'm using the money from that to build the software. I'm not taking $1 from this, right? My money is going to come from my real estate, my MD, right? My bread and butter is is going to be getting my career is in medicine, right? This is more for me as a way to give back to the retail investors to teach them about value investing and hopefully subsequently affect their lives in a positive way, which will indirectly increase their life expectancy, social determinants of health, yada, 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 yada. So that kind of is there. So I just want to kind of break it down in a very first principles direction. All right, let's get back to it. Yeah, I wanted to explain that. We'll probably make a video like that. But again, AMC community, they're different.
Into insights to physicians where now they can review that. They can query us to maybe run another EGFR test, for example, if we believe someone has stage 3 kidney disease because it's asymptomatic, or they can request that lab result. We can surface it them, or maybe we don't have it in our possession. We can go get it. But now you're actually...
Wait, give me a moment. I'm going to rewind that because, yeah, he talked about stage 3 kidney disease or stage A and stage B, and the GFR is glomerular filtration rate. Let me go back to this one.
Honestly engage back with you and tell you what needs to be improved. So that the real power, I wouldn't say any of our features are groundbreaking. We're not curing cancer or curing diabetes in the life sciences sense. Sure. But when you're able to leverage various data that us and other payers have as well, but surface it into insights to physicians where now they can review that. They can query us to maybe run another EGFR test, for example, if we believe someone has stage 3 kidney disease because it's asymptomatic, or they can request that lab result. We can surface it them, or maybe we don't have it in our possession. We can go get it. But now you're actually providing real assistance to a physician. And so when we look out in 10 to 20 years, that's going to be one of the most valuable components in healthcare, is that, because that is an actual real problem that needs to be solved that will actually accrue to lowering costs over time. If we look at the last 20 years of healthcare investing, the way to make money was to invest in business models that drive up healthcare costs.
Well, I mean, to all the doctors out there, global minded, if you're into, if you can answer this, curious, I wouldn't call, again, he said it's not groundbreaking, but I wouldn't say, how does Clover Assistant help in GFR measurements? I mean, you would technically look at the creatinine and you would see if that above 1.2, 1.3, and then you would take a look at it. You could say, oh, okay, well, probably should do a GFR. Maybe there might be other things that could be involved with other diseases that potentially could cause chronic kidney disease. I guess he's talking about if you can catch it earlier before the creatinine goes up. I'm not too sure. This is where I would like to talk. I'm working on it to bring doctors that use Clover, and we're going to get to the heart and soul of the software from an application perspective. Okay, well, that'll be very helpful for the community.
It's very hard to pivot your business from driving up healthcare costs to now we're going to drive it down. And I would not bet on that pivot working. And I also wouldn't bet on the next 20 years that the biggest healthcare business will be those that are still driving up costs.
No, it's a good point. It's a good segue to what I was asking for the next question. I guess it feels like, at least from my perspective, that physicians have many more choices about ways to sort of practice medicine from a financial point of view than they have had in the past, whether you're thinking about options to practice as part of center-based models, options to, if you're an independent practice, move to some of these physician enablement businesses that take risk across multiple payers. I guess, how do you guys think you sit in that ecosystem and you're part of that physician choice about, hey, I'm waking up and I need to make a financial decision here to improve the outlook for my practice. How do you guys think you fit into the decision-making process? Who are you the best fit for?
Yeah, so I think any organizations that are, called like MSO organizations, like a Privy or Agilon as an example, we think they're very important to the ecosystem. And they may not think that we're complementary, but I think long-term they will, where our value isn't going to be putting together governance constructs for practices and creating complex financial arrangements with third-party plans. Could, and that is a model that's available to us and maybe something we pursue, but our core value is really being that intelligence layer to help physicians make better decisions. And so if there's a contract arrangement or a setup between a plan and a practice, Clover Assistant could be valuable for that one day. Yeah. In today's case, it's Clover MA is where it's valuable. So we're very excited about if that area of investment starts to grow. In terms of payer-owned practices, I think that the challenge there is actually just more from an antitrust perspective. So I do think payers are going to be, appropriately challenged with how they can kind of leverage practices that they buy to help with their MA market share. So if they can't impact their MA market share, which it shouldn't, then they really have to look at it as running practice. So then you're back to kind of the first principles that I described. So I view them at that whole setup as kind of neutral to the future. And then because they're going to need, as we kind of move to a focus on who's driving down medical costs, those companies don't exist within the big incumbents. So they're going to have to work with other organizations. If we think about hospital-owned practices, I think it's fairly obvious now that one of the ways that healthcare costs goes up almost overnight is when a health system buys a practice, and so that's where it's really going to have to be dealt with by rules and regulation. I kind of view it more simply, which is
Yes. What drives up costs? When a healthcare system buys out a practice. Now, I am not really too privy to the intricacies of what happened here in Tucson, but we have something called the University Medical Center in Tucson, and we were losing money. We weren't making a profit. We had a lot of great physicians, leaders in the field, and they were able to, do research and ask questions. But the problem is the hospital was losing money, and Banner had to step in and buy out the hospital. Again, healthcare provider buying it out, which I assume is probably increased costs. A lot of physicians ended up leaving, again, because for various reasons. Again, I'm still learning the intricacies of this, of what's happening. But I do understand what he's saying. Healthcare companies buy in and they start basically jacking up costs. You can also argue that when Amazon bought Whole Foods, you could say the quality of the food started going down too. It's just what happens, right? When you have a bigger company coming in, right? You start getting into influential of culture. Back in the day, we used to have Epic. Now we have Cerner, which is bought by Oracle. Lots of physicians like Epic over Cerner. I personally just know Cerner. I've seen Epic. I just don't. I use more Cerner. I just don't know. I'm happy I'm being trained by the one that's, I guess, less intuitive for the majority of physicians that I've spoken to, which is good. It'll probably make me better with Epic now. The harder the better, right? I guess that's my outlook. I always have a positive outlook. But that's kind of the give you kind of experience that I've seen being in this health world. All right.
There should be a firewall between non-physicians dictating clinical practice. It's a very big difference advising or providing tooling versus dictating guidelines. Because a lot of times what happens in these contractual arrangements, physicians feel pressured under health systems to refer more and refer to higher cost settings. Because there's this fear if they don't, they might have their RVU payments cut or whatnot. So I do view there to be headwinds for that model over time.
Okay. And then, your growth has been, powered, kind of coming out of your core markets. You've increasingly been branching out into new geographies, for example. You're having a lot of success in Georgia. Just give us an update on how you're thinking about, continued geographic expansion in the coming years, what the company's plans are there, and why, for example, Georgia was an attractive market for you, and kind of what that means for where you might expand in the future.
Yeah. So our growth model, I think, is pretty insanely simple, which is just give consumers choice. You can see your primary care doctor in network at $0. You can see your primary care doctor at a network at $0. And so it's very normal for competitors to do that. It's sort of a crazy model. But from our perspective, it makes it so easy to distribute Clover system. So now if an out-of-network physician ends up with 10, 15 Clover members, we can now go deploy Clover system because it's relevant.
Yeah, that makes sense. I'm starting to understand this company even more now. I'm starting to get the every meeting, they're getting more clearer and better at describing what their goal is. It seems to me they don't give a hoot about the insurance side, which is good because it makes them have good health care. How funny, right? Because he just said it right now. He said, we're giving people choice. They can see in network or out of network PPO. It's a part of the package. And all these incumbents are like, okay, why that's crazy. What are you doing? And the key here is the reason why they're doing this, which obviously eats into their profits, is because they're trying to deploy the Clover Assistant. Again, this is a software company. Very clear. They're just trying to deploy the software, right? That's all they're trying to do right now. They're literally deploying the software. It's almost like a virus. They're just deploying it in there. And what they're doing is they're giving people, I want to say cookie, but that's unhealthy, a healthy cookie, but that looks like a really nice cookie, right? And people jump in for that cookie. And then as they jump into it, they give them information that's valuable. And that's where the magic happens. It's interesting. That's interesting. Let's see here. Good luck with Clover, guys, but health-related software is not for me. Hey, that's totally fine. That's totally fine. They are also getting better at their conference calls. I noticed the difference. Absolutely, they're getting a lot better. I agree. I definitely think. Look into our intrinsic value calculation here, Carlos. Check this out. Check this out. Let me share with you something here. Okay. So, and we could do this for AMC. You'll definitely see a difference. So if you go here into our intrinsic value calculation here, okay, as part of our all stock trades, and if you go 10 years here, and then what you can do is you can do 5% of the revenue. So they made about 1,500. They're expected to make $3 billion in revenue for this year. You can multiply this out, and this will be just 150. I've done this so many times. You could kind of put it here, 75, 150. What you can do is you can predict the stock price based on the fundamentals, right? When it can become free cash flow positive. And you can see it's currently trading at around $2.40. See the percent upside in the company, right? You can see how there's a upside. And this is the reason why we're talking about this, is because of the potential this company could bring. In the future, come by and check this company out again, and then you'll definitely see what we're talking about and what's the purpose of fundamental investing and the beauty of this maneuver that we're going to be seeing. That's what I have for that in that regards. Let's go back into the conference call. But so this is interesting. They are they don't care about the insurance, making money on the insurance. They're just using. That's what I'm like. What are they doing? It makes sense. They're just trying to spread their software. That's all they're trying to do. They're like, okay, how do I spread this? Fine, I'll make an insurance company. Okay, we're just gonna put it in there, and that makes sense. That makes sense. This is going to be a very interesting play. And if they can make money later on with their insurance plan, even though they don't want it, why not?
Relevant to them, Clover members. And so the plan design and the plan attractiveness that consumers love, which is choice, creates growth for Clover Assistant and creates growth for us. And so it is very difficult for competitors to compete with us because they've got to spend big dollars with these e-brokers and marketing payments, field agents with marketing payments, huge marketing. Like, we're not good at marketing. We haven't really focused on it because from our perspective, it's if you want choice and you want low cost, we're there. And we treat your physicians really well. We help them make better decisions. That is basically the marketing pitch to some extent. And for the incumbents, it's kind of challenging because they're having to pitch either a HMO plan where you're restricted to your doctors in terms of primary care, or it's a PPO plan. But really, if you go out of network, it's more cost. But their model breaks. Their math model breaks all of a sudden if you give them choice, because their whole model hinges on working with doctors who code really well. So it becomes very challenging. So our view was Georgia was a totally different region. We felt it was right. Humana had a lot of market share. And we felt if we can prove that out, not just to ourselves, but externally as well, that we could deploy this very simple concept into another state, that could create a lot of confidence to replicate that elsewhere. And we've proven that out in terms of just super rapid growth and taking a lot of market share, not just in terms of new to Medicare or new from fee-for-service.
That's a good segue too. I believe you guys do have a partnership with Walmart in Georgia, if I remember right. And then some news today in the space with Walmart and United Optum announcing they're going to be partnering on some of the health clinics that Walmart has in Florida and Georgia, also launching a co-branded MA plan. I think the answer probably has something to do with the fact that they're launching an HMO plan and you're focused on PPO. But I'd love to just get any early thoughts you have on that news today and how that may or may not impact your growth and market share.
So our partnership with Walmart ended in around Q1 or Q2 of 2021.
I see.
But we did partner with them for one open enrollment cycle. I think our conclusions from there. So we partnered with Walmart around kind of the 2020 timeframe in Georgia, in a bunch of counties in Georgia. We went from maybe a few hundred members to 1,500 to 2,000 members. I think our learnings from that was choice is really what matters, not like a Walmart brand or a United brand. And so we proved that out where once that partnership ended, our growth went from 2,000 lives in Georgia to over 11,000.
Interesting. Because, for us, at least for me, losing a Walmart membership branding is like, oh, no, that's terrible. But what they're saying is that it actually helped increase. They're able to grow more. And I always like to look at the devil's advocate. Well, Vivek, could that be because maybe they saw you at Walmart and maybe that drove the growth, and maybe they saw you at Walmart, or is it not? The only way to find out is when they go into other states where Walmart wasn't even introduced there, quote unquote. Then potentially we'll see the growth. Now, again, Walmart's more national, so I mean, they probably saw it either way. But that effect will wane, and we'll see if maybe that was the case. And again, I'm playing devil's advocate. I'm just trying to figure out what's going on here. Okay.
In the following up role without that co-branding or anything like that. And the longer term, I get it from United's perspective. They have very little presence in Georgia. They see Humana there. Not that they pay attention to us, but we're growing pretty fast there. And I think they need to sort of wedge into the market. What does Walmart want? Walmart wants folks to come into their store and also see clinicians in some of their centers. So I do think from Walmart's perspective, they can maybe dictate to United what to do in that market, which I think could build a valuable business segment. It's good for Walmart, good for United in the sense they're getting into a market that might be tougher. But when we think about kind of the big picture, it's not solving what we're focused on.
Okay. That makes sense. And then, just thinking about, one thing that's been focused a lot.
Yeah, I mean, it caused some problems. I mean, United's seeing Clover's growing. Everyone has their eyes on Clover, which is why a lot of Clover upper echelon executive leaders don't say where they're going to go next, because then they're not going to get a head start. It's definitely problematic, I would say, but they're saying that it's not their niche and what they're looking for, and this we will see if the words meet the results mathematically when we look at their growth and their cash burn. So we're going to see about that.
A lot for Medicare Advantage. It's been increasing level of competition. I think everyone sees the demographic trends, and it's kind of hard to ignore how powerful they are. Would love to get a sense of how you characterize the competitive environment at present, and what you think the outlook for that might be over the next couple of years.
Yeah, I think whether it's an organization like ours that is recently public, losing money, I think it's important for companies like us to prove out the business model on the P&L side. So I think that's important for us as an organization.
No, yeah, I completely agree. But for me, saying is something, but mathematical earnings report, looking at the numbers, is another. For me, it sounds like I'm being mean, but again, this is how, as an investor, you got to ask these questions. You just got to I love the guy. I love what he's doing. I love Clover. But from the investing standpoint, you got to make sure you ask these questions. If not, then you're going to, your emotions will take over on another play, another stock, and you're going to lose. So it's good to kind of ask these questions. Hope that makes sense.
I do think a lot of the incumbents are probably doing this as an opportunity to buy certain assets that they deem as undervalued. We view the opportunity as massive over the next 20 years. I'm the largest shareholder in the company, and I've invested a lot of my own capital in it. So I view this over the next 10 to 20 years, and I have that ability to do that. And so I think that allows us to make long-term decisions guided by solving what we think is an important problem. So I think in the next 2 years, our job is to create certain proof points that make it easy for even the most casual observers to realize, oh, wait, like they are actually solving a real problem, not just trying to monetize MA.
There it is. 2 years. 2022, 2023, 2024. My price target, I said 2024, 2025. So 2 years. 2 years, we're going to see some magic.
So I think that the organizations that can't articulate very clearly what problem are they actually solving, or if you can't go down to different layers of the organization and everyone's not articulating the same thing, you're just monetizing the system. And I don't think that's scalable. I don't think that's sustainable. So I have no doubt in the next 2 years, everyone will figure out, as they always have, ways to monetize in healthcare. But structural changes are coming. Maybe not in the next 3 years or 5 years, but maybe in 5 to 10 years. But it's something that I think is ever present, where I'm sure every call you have with every company, you're focused on what are you doing around reducing expenses? What are you doing around lowering costs, but dealing with the competition on more attractive plan designs? And so for us, it's really kind of push up the noise, because we know the underpinnings of every model is narrow position choice. And you can widen that, which is the crux, and then have software be that equalizer to help decision-making at scale. We think that's really key. I think another kind of natural byproduct that it wasn't our intention, but what we learned firsthand was when you create a really attractive plan design in all markets, you end up with a very diverse membership. So we're about 50% minority of our membership. The national average for MA is just over 30%. And so what we learned is, if you actually create choice in all markets, that is what you normally end up with for an MA mix. So we are optimistic over time that there is more of a focus on health equity from a regulatory perspective, and that we think will be a tailwind for us. Recently CMS created a health equity summary score, prototype of it, and we scored amongst the highest of all MA plans in the country. And I think that is a sign of
That's a big sign. That's a good sign of success. That's a good sign that Clover is headed in the right direction. What he's talking about is the direct contracting, switching to ACO for CMS in 2023. They're scoring now more for diversity as well, trying to get at the social determinants of health and healthcare disparities in this country. And Clover is going to be leading that, and that's really good.
sign of things to come in terms of as there's more data that surfaces around that.
Got it. And then, you mentioned proof points around the financial model. I guess, how do we think about, the levers you guys will need to pull over the next few years to get to that point? I guess how much of it is, Clover Assistant continuing to increase its penetration? How much is Star Scores progress over time? How much is, I guess, just scale? And then, you're constantly, I guess, going to be offsetting that with a degree of, expansion into new markets, which tend to come at lower margins. I guess, how do you think about balancing those factors and what the key drivers are going to be for you there?
Yeah, absolutely. So we've dramatically improved gross margin this year versus last year, and we hope to do the same next year versus this year. On the OpEx side, it's a huge focus of ours now.
So very quickly, gross margins, they're going to improve it next year. It's going to be on a better improvement, which is good. Again, gross margins, the better they have, the higher the gross margins, the better, which means that they will be able to squeeze more out of that dollar to essentially bring it into as profit. CapEx is, again, in the statement of cash flows. You have cash from investing opportunities, cash from financing, and then cash from operations. And again, cash from operations minus CapEx, which is cash from capital expenditures. If you could subtract that out, it basically gives you free cash flow. And now we're going to get into the free cash flow talk.
And it's something we're being very intentional about. We think there's a ton of efficiencies that we're going to be able to drive without sacrificing intelligent growth. And I call it intelligent growth, which is there's definitely a balance we're focused on in terms of making sure the growth is profitable but still attractive, but where we're in no way sacrificing the attractiveness of what we're building long term as well. And so when we think about just, and then kind of getting to your stars, I think is a part of that longer term. We're 3.5 stars for payment year next year. We'll see what happens this October. But when we first listed, we did give guidance that we would be at 3.5 stars for last year's measurement. We're going to change that, but we'll know more.
Okay. And then you mentioned that you do have a different distribution approach maybe than your traditional MA plan. Can you talk a little bit about why your strategy is what it is on the distribution front? I guess maybe why not have more involvement with some of the other broker channels that you minimize a little bit to some degree? And just love to get a sense of whether you think that could change or this is the right approach for you.
Yeah, so we definitely saw a little bit of an impending kind of train wreck a few years ago when we looked at kind of a lot of these e-channels, e-brokers, mainly because the churn was super high coming out of those channels. And then when you look underneath the hood and try to understand why, the plan that ends up with the most enrollment is the one who gives them the most marketing dollars. That's never been our strategy. As I said, we're very simplistic with the growth strategy. So our view was there's a lot of the channels are going to be challenged in their own business models to really remove kind of the marketing dollars from the equation of guidance that they give to the sales team. That just doesn't work for us. It's a great way to maybe hit Wall Street guidance if you're like a big incumbent, just pump more money into those channels. But from our perspective, it doesn't again fit with kind of our long-term model. So a lot of our enrollment, much more than half, has come from just field agents. And so it's not that we're fixated on field agents, but we are very focused on who has the relationship with a customer and is it a trusted one? Well, that's what we want to work with. And our job is just to walk through the value of Clover. And if they feel accountability to the customer, we know we'll win a lot of those conversations. So when we think about sales channels, it's really about if it's direct to consumer, we're not that concerned whether someone, if we get an inbound, it doesn't really matter if they sign up for Clover or not. From our perspective, we just want to make sure that we're helping them make the right decision. Even if it means another plan, we know that's going to come back and benefit us long term, just from word of mouth and how we dealt with that conversation. We think it's good business, but it just comes down to just making sure we're having trusted conversations or through proxies we're having those trusted conversations.
Okay. And then to pivot a little bit, obviously, utilization as we move through various kind of phases of the pandemic has been a huge area of focus. We'd love to get an update on just generally how you guys are seeing utilization trend and how you're thinking about it as you went to develop bids for 2023. I guess what's your perspective on where we are versus baseline and how you think about where that goes over the next couple of years? Obviously, it's a big area of uncertainty.
Yeah. So the way our approach is to be not just even conservative in terms of how we formulate internal estimates, but even how we impute future uncertainties into bit while kind of balancing for growth. So we reported approximately 94% year-to-date MCR for MA. We kept our guidance to the 95 to 99 just because I think we just do live in a world still where anything can kind of happen. And so, fortunately, there hasn't been any material COVID impact change, this year. We kind of look at it versus last year. But at the same time, I do think I think you have to impute in that there's going to be some cost with long COVID as an example. It's not discussed a lot, but I'm sure we're going to see tons and tons of literature about especially for the elderly, those who are covered, and what are kind of the downstream costs there. And then, with the government dialing back its coverage on the financial side of vaccines and whatnot, but Pfizer and Moderna are going to insure once a year, so that's going to become part of the cost structure. So I think you have to impute all that in. So maybe it can be good as conservative. I think it's just being prudent is to take that into account. Are we taking into account another pandemic next year? No, we're not.
Okay. And then, as we're wrapping up here, just maybe one last question. Obviously, the company has been focused a lot on the MA side since it's founded. Obviously, direct contracting or now ACO Reach has been another big opportunity for you. Love to just get a quick update on what the state of play there is, I guess how that's performing relative to your expectations, and just big picture how we should think about that opportunity for the company over the next few years.
Yeah. So when we think about extending Clover system to any line of business outside of Clover MA, programs like that, no different. Our primary goal is how do we keep improving Clover system? And it's been incredible, I think, for our team internally on the technology side and the clinical side to really think through the puts and takes around that when we're not the MA plan. So I think the learnings through that are going to guide us to next year, hopefully, what we call our non-insurance line of business. Our goal is to drive operating income through that. And I think the learnings this year are going to help us get us there and take us even beyond those programs. So when we think about a program like that, MA for us, growth is important and in driving share. When we think about a program like that growth is important, but I think what's most important is to generate operating income, given the fact that really it's a software business in that case. The monetization strategy is driving savings, but that's how we think about it. But I think kind of the short answer is we've learned a ton, and it's going to help us make some really right decisions for next year.
Got it. And then I guess the actual last question, just if I maybe go 10 seconds over, would be just, when you think about bigger picture opportunities to maybe monetize some of the software outside of these opportunities, I guess how's the company approaching that? Is there anything that you can talk about at this point?
Yeah, I would say the thing that I think we can talk about is it's something that is very, very much part of our long-term aspirations. And I think the fact that within our own Clover MA plan, our historical data shows we generate in excess of 1,000 gross margin basis point differential between docs on Clover system versus docs who aren't. We know there's a ton of value to create there. But we do believe in some extent working backwards, so thinking through where do we want to be in 10 years and then sequencing it there. But more to come on that.
Okay, well, fantastic. Well, thank you very much for your time today. Really appreciate it.
Thanks for having me.
Great speaking with you.
Thank you.
Good. This is good. So I wrote down a couple notes that I wanted to basically talk about. He talked about not 4 stars, but he said that October we'll find out. Possible 4 stars. That'll be really nice. That is interesting. Let's see here. Another thing they talked about was their MCR. They went on track for essentially 94%, but they guided for 95 to 99% because they're getting, they want to be a little bit prudent in regarding to the downstream effects of COVID lungs in the elderly population. For people that are interested in wanting to see what COVID lungs look like, we could go ahead and look at it on Google. We can type in COVID lungs. It's really bad. X-ray. You can go here and take a look at it. There's a COVID positive so this is like a COVID positive vaccinated, but this is COVID unvaccinated. You can see this patchy diffuse infiltrate happening here. And let me show you what a normal chest X-ray looks like. A nice normal X-ray. You can see that this is a mass here on the right side. Let's do a normal chest CT. You can see the normal chest CT, very beautiful. It's you don't really see any patchy infiltrates. Let's look for more here. See the vasculature here. But if you look at COVID lungs, you can see this very crazy infiltrate here, this patchiness. And that's exactly what they're kind of afraid of, what's going on. That could happen downstream. Operating income next year. What is operating income? It's gross income minus operating expenses. They want that to increase next year. So that'll be great. They said that they have 1,000 basis point advantage when you versus the incumbents. Now, I spoke about this last year when I talked about Clover. For people that don't know what 1,000 basis point is, we'll break it down. 100 basis point is equal to 1%. 1,000 basis points is equal to 10%. 1,000 divided by 100 is 10% difference. And that's what Clover Assistant brings. So overall, it's looking pretty good. I wanted a little bit more discussion on free cash flow. Again, they talked about it with CapEx indirectly, but I would love to it being discussed a little bit more and direct on. I feel like they may be backpedaling from the statement of free cash flow positivity in 2023. Or maybe I read it wrong. I could have read it wrong in his talks on, I believe, Twitter. If we can go ahead here. So there were some talks back in, let's see here. Let's see here. I think it's this one. Let's see. Here it is. A path to profitability and free cash flow. This was in May. Yeah. We're really excited about Clover Health's start to 2022 and the groundwork we're laying for 2023 and beyond. We remain focused on delivering improving margins and ultimately generating significant positive free cash flow. So maybe the beyond is 2024. We'll see. But he did say 2 years out, people are going to start to see that, holy moly, this is a software company. And again, it takes time to build this. Okay. So you're essentially, what's happening right now is, and exactly, the software is growing. Absolutely. What's happening now, guys, is you're paying for growth at a discount. You're like buying this company at face value as just another insurance company, which is already a good deal, but it doesn't factor in the growth potential and the expansion of this tech moat. Moat is the key word here that they're building. Okay, and these are not just my words; these are Vivek's words back on May 18. Again, the tech moat. Okay. So yeah. Well, that's pretty much it for the Wells Fargo meeting. We broke it down pretty damn well. We broke it down, and hopefully, I messaged the guy from who interviewed him, and I would love to have him on. Hopefully, they can come. Message him on LinkedIn. Maybe if you can find his Wells Fargo email. I looked into it, but I didn't have time to look a little deeper. But yeah, if you have, any physicians that use Clover, tell them about who I am. Tell them about my credentials and what I've done, and we'd love to have them on here to again build a community. And I'm very happy what we're building here. Again, just like how Vivek is in it for 15, 20 years, I'm in it with this YouTube and our stock trades platform for 15, 20 years. I have invested my own money in here. Yeah, it's going to be fun creating something. Again, software, it's very tough to create something that is scalable. We're going to go in the Indian markets, and I believe there's a lot of great stuff there. And we're just going to be able to, our software can track Canadian markets too now to help with Canadian investors, and we're just going to keep growing. and it's going to be good. I love where this channel's headed. We're growing at a very nice, very nice, respectful pace, and I really do enjoy it. It's really fun. We're gonna go back to the shorter videos. It's just these lives are important when I haven't really talked to you guys in a while. Just kind of set the record straight. Okay. Absolutely. It is going to definitely be epic. I mean, the future, this is great. I mean, right. The future's going to be bright. You guys are going to see these wrinkles get bigger for me as I age. You guys are going to see me age, I got to work out more, but I just created a workout channel in our Discord, and we could come together and motivate each other. I do wanted to share with you guys something funny. I just saw today. Let me share with you guys something very hilarious here. So let me stop sharing screen. Let's go here. This is hilarious. So I made a comment here. What the hell? This is, I'm so tired, man. We're doing so many things. Listen to this. I said, I commented at 3706, what WTF LOL. So let's see. I'm going to make myself yawn. And if I make you yawn, comment down below. All right, let's listen to 3706. Sorry, I'm yawning today. It's been yesterday. Sorry, I'm yawning today. Yesterday. What the hell am I trying to say? I was like, I just was talking about yesterday's clinic and how it was the whole day for me, and yeah, that was funny. And I was like, what in the world? It reminds me of that guy on that guy on what's his name? This guy here. Let me show you. This guy right here reminds me of this guy. This one here.
So the most important thing you gotta remember is, okay, so some people were, they were doing some stuff, and then other people were like, hey, don't do that stuff, and then other people
like, what the hell was I doing there? Yeah, it's just a fatigue from the hospital. That's all. But yeah, I love you guys a lot, and I think that was kind of very funny. Like, what the hell was I talking about? But I hope this was very informative, very helpful. Clover's headed in the right direction. Personally, for me, I want to look at free cash flow. I want to look at the gross margins. I want to, again, it's time for them to show us some magic. Now, they've been showing us revenue, but I want them to capture this revenue. I want them to be able to incorporate it to where they're not burning cash. They're funding themselves, which will ultimately fund the shareholders. Okay, I'm not looking for a dividend. I'm just looking for a Wall Street to see that their business model works. That's it. Okay, and then and only then are you going to see this stock go to insane levels. And this will be great, because if it takes some time, it's going to be annoying, but we're going to have more time to dollar cost average. So that's the idea. We'll be staying with you along the way in Clover's journey. And we're going to talk about the stock when everyone's like, wow, whoever got it at $2 is a genius. And, 5-10 years from now, when we're sitting in our Clover Lamborghinis, right? I'm just kidding. Spend responsibly. That's not a good way to spend. Depreciating asset, terrible. But in our hypothetical Clover and Lamborghinis, when we have a Clover shareholder investment party in Las Vegas, when we can party, rent out a whole club, and just kind of party, and then I think that it'll be very fun. All right, guys. Love each and every one of you. And cheers to financial literacy and changing one's life for the better. And we're going to be including the workout channel to help with with the other side of life, which is investing, in your body. All right, love you guys. Peace out. Much love.